It's your boy Tyler, and we are back at it again, and we are talking about AMC stock because they are down almost 5% today, and they are being shorted all the way into the ground. So we're going to be going over what I think is going to happen with AMC in the long term and in the near term, if I think there will be a short squeeze, as well as go over the probability by going over the short volume ratio, the short interest, the dollar amount that is still shorted, all of this information you guys need to know if you are trading or investing in AMC for the long term. We will also be going over this article that is suggesting that retail traders are the reason why AMC is getting beaten down so hard, and in their words, is doomed. So I just think this is simply not the case. So I really want to go over this article as well as any of the recent news that has been happening with AMC, and we are going to take a look at the technical analysis because I think we are in a spot where we really should talk about the technicals. Now, before we get into all that information, I do want to acknowledge the fact that if you guys are watching other YouTubers that are talking about AMC and they are giving you crazy, unrealistic price targets, that is just not the case. Like on my last video with AMC, I got this comment that says, so your short squeeze price target is $15 to $20, lol. Please don't quit your day job. Now, if they're not showing you that they're putting their hard-earned cash on the line in these trades, don't listen to a word they say. Unlike this channel, I go over if I am playing something, if I am not, and I show you my positions. So my price target does stand at $15 to $20, which is an upside of over 100% right now. If people are telling you $50, $100, $200, they are lying to you, and especially if you are a newer investor, do not listen to that at all. On this channel, we are not lying to you. I am not doing anything. I don't care if you watch this video, if you like this video or not. I'm trying to give the information that investors need to hear, whether they like it or not. Just like how I called out CCIV when it was overstretched at $50, nobody liked that. But what happened 2 days later? We fell 45%. Now, that is totally off topic, but it really is irritating when investors just don't understand because they're being told all these unrealistic price targets and actually believe it. That's the hardest part. That's the part that just really gets me. So with that being said, if you do like an honest, open, and transparent YouTube channel, hit that like button for me, consider subscribing and hitting the notification bell. Now that that rant is out the way, let's start the video off by taking a look at the recent news, and most of this is pretty bad. AMC rescheduled its annual meeting. Did retail investors just doom AMC? AMC Entertainment stock drops towards 6th straight loss ahead of earnings report. What's in store for AMC Entertainment? AMC Entertainment stock highlights corruption on Wall Street. 3 reasons AMC stock is a flop in the making. Now, this is absolutely BS. The theater industry is not going away. Date night and movie is not going away. I can reassure you guys that. The only issue now is trying to figure out a justifiable valuation going forward into the future because they do have a high level of debt. Now, if you were only trading AMC, that is nothing to worry about. For a long-term investment, it could be something to consider, but I do think at its current valuation, less than $5 billion, AMC is a good buy. Now it's just up to the fact, will you get a better value if you invest in something else rather than AMC? And I'm not going to elaborate on that too much because obviously there's a million other investments that may or may not outperform AMC, so that is totally up to your own opinion. Like I said, I'm not going to elaborate on that, but I do think AMC is a good buy at less than $5 billion market cap. Now, I do want to touch on this article that we mentioned in the beginning of the video. It is titled, Did Retail Investors Just Doom AMC Entertainment? And that's just not the case, but the subtitle says AMC has dropped a proxy bid to double its authorized share count, but investors shouldn't be celebrating. And I'm just going to kind of sum up the article for you, but first things first, I have a huge problem with this title because retail investors are part and part why AMC has not went bankrupt so far. And even the CEO had said that himself, that it gave them enough capital without having to issue high interest debt. But basically what he goes on to say in this article is AMC is not supposed to even turn a profit until 2023. And even though they decided to not give the authorization to issue 500 million more shares, that should not be seen as a good thing. And basically the only positive he said in this article is right here. It says, as of April 27th, Godzilla vs. Kong reached nearly 407 million in worldwide sales, with around 320 million deriving from international markets. Though this isn't going to break any records, it's the unquestioned most successful film debut since the pandemic begun. It may signify customers' willingness to get back into movie theaters. Basically, it goes on to say that they have a lot of debt that needs to be paid by 2026, and the interest rate on this debt is pretty high. Now, they did say in their last press briefing, whatever you want to call it, the CEO said that they could use some of this $43 million of capital that they are going to issue eventually from the shares that they are already authorized to issue to refinance some of their debt. So they could get a lower interest rate on this debt, and that is very likely that they will do with some of the capital they raised from the 43 million shares. And I do just want to point out that AMC could be a big target for a buyout. Amazon and Netflix, there's already been rumors about them trying or at least inquiring about buying out AMC. And I do think at a $5 billion valuation, even if they bought AMC for $9 or $10 billion, that would still be a good deal on both sides of the aisle. I mean, the share price would about double from right now where it's at about 4.8 billion. If they bought it out for 9 or 10 billion, that would still be double. So investors would be happy. Hopefully you didn't buy this in the $20 range. Hopefully you averaged down if you did. But either way, I do think AMC will be fine. There is a lot of blockbuster hits. I think there's 9 or 10 Marvel movies alone that are going to be sent to theaters before they go to Disney Plus, or at the same time. I'm not quite sure about that. But there will be a lot of films going to theaters that will draw people back in. And as we already know, with all these stimulus checks, people have the funds to go to theaters. That is not the case. It is, are they going to get back to theaters? And I think they are underestimating how much demand there is to go and do things. People want to go do things. They don't want to sit in the house anymore. We're done with that. It's vacation time. It's time to go do stuff. AMC is going to be reporting earnings May 6th, so that is Thursday of this week. So we are going to take a look at what analysts suspect their earnings are going to look like. So the company is likely to see a decline in the bottom line when it reports first quarter 2021 earnings. In the last reported quarter, its earnings missed the Zacks consensus estimate. However, revenue surpassed the same by 12.8%. Nonetheless, both the top and bottom line declined year over year. And obviously, right, we were shut down for most of the year. We just opened. And Q1 estimates. The Zacks consensus estimate for the first quarter bottom line is pegged at a loss of $1.15 per share, compared with a loss of 2.22 per share in the year ago quarter. The consensus mark for revenue stands at 147.8 million, indicating a decline of 84.3% from the prior year quarter. So obviously, first quarter of 2020 was not a good quarter. Most theaters just had to shut down abruptly with no warning whatsoever. So obviously, it's a decline of 84.3%. Well, after that quarter, they did get Q1. Q2 was the really bad one. So obviously, it's going to be a big decline. But I mean, nothing to really be too concerned about. I think earnings are going to be good. That is just my opinion on it. What do I know? I'm just the dude behind the computer. So, but let's keep going. The impact of coronavirus pandemic is expected to be reflected in AMC Entertainment's first quarter results. The pandemic-related disruptions continue to hurt its revenues at admissions, food and beverage, and the other theater segments. The Zacks consensus estimate for admissions revenues is pegged at 81 million, suggesting a decline of 85.7% from the prior year quarter. The consensus estimate for food and beverage revenues for the first quarter of 2021 is pegged at 41 million, indicating a decline of 85.88% year over year. The consensus estimate for other theater revenues is pegged at 11.2 million, suggesting a decline of 89.4 million from the prior year quarter. Notably, the company is in the process of opening most of its theaters, maintaining safety and cleanliness and social distancing protocols. These efforts entail high costs and are likely to have weighed on the first quarter performance. So if you have been on this channel for quite a while, I made a video where I called AMC theaters not too long after they had opened, and they said they had really good demand. They had a hard time even accommodating all of the people that wanted to see movies. So if that is the story for most theaters, I'm not going to say all, but most theaters, then earnings will definitely come in over what they estimate. And I do think that is what we are going to see. Our proven model does not conclusively predict an earnings beat for AMC Entertainment this time around. This is because the stock needs to have both positive earnings ESP and a Zacks rating. Okay, that's nothing to be too concerned about. But long story short, the earnings may come out to be bad year over year because obviously first quarter of 2021 was kind of starting to get a little bit rocky, and then definitely Q2 was starting to get rocky. But I think they are way underestimating AMC. And even if you do some simple due diligence like I did in one of my videos about 2 months back, where I called the theaters myself and they said that they were all busy, and it even sounded busy over the phone. So I do think earnings will be good, and this could be a positive catalyst, like I said, on the near term horizon Thursday to make AMC shares go much higher. Now, getting into the technical analysis, this obviously looks very bloody. This is the candle we've seen today right off the rip, down at about 6, almost 7% at our lowest, and then we have since bounced at about midpoint throughout the day, and now we are at $9.40 per share. And I do want to point out this strong level right here at the $9 mark. This is going to be crucial. If we fall under this, that's definitely not a good sign, and we will have to find another bottom. But for right now, $9 does look like to be a very good support level. And as far as resistance levels are concerned, we are going to see a little bit of resistance around the $10 mark, around 982, but I do think our more major resistance level is still going to be about $10 per share. That is where I see a lot of psychological resistance coming in. But if earnings are good, then we could definitely see a pop up to about the $10 or even $11 mark. That is where I put more resistance at, just because, like I said, that would be quite a bit of a pop, about 30% from its current share price at $9.40 per share. But it does look like we could bounce in between the $9 and $10 mark for quite a while here, just depending how earnings go. That is going to be our major catalyst going into the future. Now, let's take a look. I like to use Fintel and take a look at the short volume ratio, and this is not going to be updated for today, but as of yesterday we were at a 16% short volume ratio. So out of 31 million shares shorted, we had almost 5 million shares, or out of the total market volume, which was 31 million shares, we almost had 5 million shares being sold short. And if we do come down here, that is, I mean, it is going down. It is going down 16%. We were at in between 22%, almost 19% at a lower point, and then we were April 20th at 30%. And we've really started to drop off as of, yesterday, Monday. So it'll be interesting to see how this comes out today. And this is something you guys want to keep mindful of if you are trading AMC, especially because this does update this every single day. So Fintel is a great resource to use, especially for trading, because you'll be able to see the short volume ratio for the day quite soon here. I'm not sure exactly what time they put this up, but usually if you look by about 6 or 7 o'clock, you can see the percentage of shares that were sold short in the same trading day. So not even the next trading day, it's the same trading day. So you guys should take a look at this later if you are trading this, just to see if we have more shares being sold short today, because we were down so much. Now, my opinion on this, it'll come in at about 22% like we have seen recently. That is just our comfort level. That's where kind of 1-2 days we're about 22%, and then this one was 16% yesterday. So I do think it'll come out at about 22%, maybe 21%. So that is something I'll be watching for later, obviously well after this video is posted, but this is still highly elevated. And just taking these numbers and doing some rough math, we're probably around 23 to 24% short volume ratio. So that is why I have my price prediction at $15 to $20 per share. Just being realistic here, we don't have the short volume ratio that we had before when we did short squeeze last time. It was easy to short AMC because they had no revenue, and it did look like the business was going bankrupt. So that is why we've seen a massive short squeeze from $3 to $20. But I don't see that. I see in between $15 and $20 per share, no matter who likes it or who loves it. That is what I see, and that is what I am going to stick by. That is all for this video. That is the technical analysis, the short volume ratio, which is a good indicator as to what the short interest is in the total stock, as well as was, is AMC doomed? Quite frankly, I don't think they are doomed. They are a buyout candidate, but this could be a while until they're actually profitable again. And that really doesn't mean too much if you are trading this. Now, if you are investing in this for the long term, you will be more concerned about that. But I'm going to go ahead and get out of here. Leave anything that I missed down below in the comment section. I do respond to every single comment. I will see you guys later. Take care.